Alright, so on to the statement of reserves for this question, often called the statement of capital, the same as the accumulated fund from club account questions. So your statement of reserves is assets take away liabilities at the start of the year on the 1st of January. So you're going to find most of your stuff here. You also need to just go through the receipts and payments, see there's no hidden assets or liabilities revealed in here, and just have a quick check through this for any 2016 stuff as well. I'd already done all these adjustments in the previous video. I don't think any of these gave me anything in the statement of reserves. So let's go to our list of assets and liabilities on the 1st of January at the start of the question. So I've got buildings and grounds at cost €600,000. That's grand, that's an asset, but just be careful, it says all fixed assets have 3 years accumulated depreciation on the 1st of January. So it's cost of 600, but they're not giving me accumulated depreciation anywhere, so I need to work that out myself. So as I've said, I've done workings just kind of following the numbering here from these adjustments. I probably should have started calling these workings 1, working 2, working 3, but what I'll do now is I'll start kind of a W1, a workings 1, workings 2 system now. I probably should have been doing this before, but we'll start this and we'll say workings 1 is getting the accumulated depreciation. So working 1, accumulated depreciation. So buildings is 600,000. They're depreciated at 2%. So by 2%, that's 12,000. And then it's 3 years. So that's 36,000 accumulated depreciation. So you're going to go 600,000, take away 36. Okay, and then when you come to your balance sheet, don't forget you did another 12,000 or another 14,250 for this year, which you'll be adding on. So here's accumulated depreciation, and here's this year's depreciation just for your balance sheet, which we'll be doing later. Next asset we've got then is equipment at cost, and that's 80,000. That's depreciated at 20%, so by 20%, that's 16,000. And again, by 3 years, gives me, this time, 48,000. Furniture then. Let's start now. Furniture, or just, yes, I was supposed to say just buildings. I did buy some buildings during the year, but remember, I'm just looking at 1 January, so at the start, the fact that I bought some buildings in 1 April is not important to me. Same with the furniture. I sell some during the year, I buy some during the year, but that's not important to me. What's important here is 1st of January, I had furniture that cost 40,000. So 40,000 multiplied by 20% is 8,000, and then by 3 years is 24,000. So there's my accumulated depreciation amounts. So then just on my actual statement of reserves, which is just statement of reserves, 1 January, 2 columns, assets, and then I'll list all these. And then I'll put in buildings, equipment, and furniture. And buildings is 600,000. Take away the accumulated depreciation there, 36,000, and that is 564. And I'll just say that's working 1. Equipment then, 80,000. Take away accumulated depreciation of 48. That's working 1. So that gives you 32,000. Furniture then, 40,000. So I just calculated 3 years accumulated depreciation to be 24,000. I did that in working 1, and that gives me 16,000 as my furniture asset at the start of the year. What else have I got? Stock in shop at 5,000. So opening stock in the shop of 5,000. Yes. Okay. So stock in shop of €5,000. That's an asset. Stock of heating oil, same. So stock of oil, 1,800. Contract cleaning, so an expense prepaid. So it's prepaid, so it was paid for last year. The service is being done this year. I won't have to pay for it this year, so that's an asset for me. So €200 cleaning. Prepaid. Investment interest due, so money due at the start of the year from last year. So that will be an asset, yeah. That's 300. And if there's investment income, that tells me there is an investment. I don't think that's listed at the start of the year. So I think they've left that off their list of assets. So I might have to work out what that investment is, or they might give me some information that lets me know how much that is. Creditors liability 2,000. Members fees paid in advance. So that's paid last year, but I need to give them the service, the use of the club this year. So I owe them the service. So 3,000. That's a liability at the start of the year. Authorized capital was 500. Issued capital is 350. So the 350 is going to go in as a liability, but it's the 350 is the actual issued capital, not the authorized. Okay, but that's telling me I've got room to kind of issue further capital if I need to raise funds. That might come up maybe in the last part of the question. But that 2, that 3, and that 350 is going to go in as a liability. You can skip space and put the liabilities in now, but I think I'm going to just go and find all the assets first and then do the liabilities. So the one always to check is bank then as well. So they will often leave the bank balance off this list, and you'll get it from the receipts and payments book. So the opening bank balance of 59,500 is on the debit side, so it's an asset. So 59,500. Right, so I know I'm definitely looking for my investment when I go through this, and just any other hidden assets. So members fees, interest on 3% investments, there it is. I'll just check there's nothing else and see if there's anything else about the investments later. So shop receipts is income, sale of furniture, I'll have to deal with that and do a profit or loss on sale of furniture later. Expense. Addition of an asset, so I've done stuff with that already. I'll have to do stuff with that on the balance sheet, but it happens after the 1st of January. Furniture, laundry, loan. So here's one we've seen before as well. So bank loan plus 15 months interest at 4% per annum on the 1st of April 16. So we're going to need to figure out how much of this 63 is a loan and how much of it is interest. Some of that interest will be for this year. Some of it will be due at the start of the year. So the loan itself and the interest due at the start of the year will be liabilities. What's payable, what's in respect of this year for that 3 months will be in your expenditure, your income expenditure account. So that's, but it's a liability. Okay, so we paid back this loan of 63 on the 1st of April. If we paid it back in April, we must have had the loan on the 1st of January. Again, they've just left it off that list of assets and liabilities. So it's anything to do with, so it's 1 January 16 is when we're doing this. So anything to do with 15 I'm interested in, or anything which is there on the 1st of January 16. There's nothing here in these pieces of additional information. So it's the investments to figure, yeah, that'll be the one here. Yeah, there's nothing to do with investments for 17 even, because what I'm going to do is I'm going to use this interest on 3% investments, $3,000, to work back to what the investments is. So if they pay 3% income and I have $3,000 income, I'll be able to use that to work back, but I need to just adjust for due at the start of the year and any interest due at the end of the year. But I don't think there's any due. Is there investment income due at the end of the year? There isn't. Okay, so to work out those investments then, so we'll do that in working 2. So interest received in 2016 is €3,000. But at the start of the year, there was investment interest due of €300. So of this 3,000 I received in 16, 300 of it must be for the previous year. So it must be for 2015. So that's interest due 1st of January 16, so from 15. So that means of that 3,000, 2,700 is for this year. Okay, so that €2,700 is 3% interest. So what I'm going to do is figure out what 100% is, because that's the value of the investment. Okay, so it pays 3% interest every year. So the 3% interest that's paid is €2,700. So to figure out what the actual investment is, you'll figure out what 100% is. So the 2,700 divided by 3 is going to tell you what 1% is, and then multiply by 100 is going to tell you what 100% is. So 2,700 divided by 3 is 900. 900 by 100 is 90,000. So that's your investment on the 1st of January. Yeah, so it's 90,000 is what the investment is. So investment at the start of the period is 90,000. Alright. And then and then this 2,700, so it is only 2016 interest that I'm interested in for my income and expenditure account. So just that 2,700 is what you're going to put in your income and expenditure account or your P&L account. Alright, rather than 3,000, because some of it's for the prior period, so it's only 16 stuff we're interested in for this year's profit and loss. But the 90,000 is what I'm interested in getting, and that's what I've got. So that is all the assets, I think. 2, 4, 6, 8, 9. Yeah. So then just add those up, and there's 7, 6, 8, 800. Less liabilities. So I had 3 certainly at the start of the question. So I had creditors for supplies. They were 2,000. I had members' fees paid in advance. So I've already received that money, but I owe them the actual use of the gym, the fitness center. So I owe them at the start of the period, so that's a liability, so that's 3,000. And the issued capital. It's 350, so it's the issued, not the authorized that you bring in. And then the only other thing I found was the loan. Okay, so bank loan plus 15 months interest at 4% per annum on 1st of April. Okay, so let's work this out. So we make this working 3. Again, I've badly numbered these by only starting here, but working 3. So bank loan plus 15 months interest at 4% per annum. Right, so if there was, 12 months interest is equal to 4%. So what would 15 months interest be? So divide the 4 by 12, so that's like a monthly interest rate, and then multiply by 15, so 5%. So 15 months interest is equal to 5%. All right, so we're told the interest is 4% per annum, so it's 4% for every 12 months. So I'm told this includes 15 months interest. So just to get that as a percentage, the 4% divided by 12 months, because that's an annual rate, multiplied by 15 gives you 5% as a as a rate for 15 months. So that means the 63,000 euro, which is there, is equal to 105%, because it's got the 5% interest added on. So I want to go back to 1% and then figure out what 100% is, because that's how much the loan is. So 63,000 divided by 105 multiplied by 100 is 60,000. So 63,000 divided by 105 to get what 1% is, and then multiplied by 100 to get what 100% is. So that's 60,000 euro is your actual loan. Okay, so that's going to go in my liabilities. So loan 60,000, and then I've got 3,000 interest, which needs to be split between due at the start of the year and for this year. So let me see. We repaid it. So yeah, so 3 months are for this year, and 12 months is what was due at the start of the year. So 12 months interest is 4% of this. So if I get 4% of the 60,000, there's a few different ways of doing this, but I get 4% of the 60,000. That's a year's interest, and that's what was due at the start of the year, and then it was 3 months then for this year. So multiply that by 4%, 60,000 by 4% is 2,400. And that's your interest due at the start. Okay, now you'd 63,000, so there's 3,000 euro of interest. So 3,000, take away the 2,400 due at the start of the year is 600, and that's interest for 2016. So that is going to go in your P&L as an expense. This 2,400 is going to go to your statement of reserves at the start. So loan interest due 2,400. Okay, so of that 63,000, 60,000 and 2,400 are here, and the other 600 is going to go into your P&L as loan interest for this year. All right, there is a couple of different ways you could have worked through the maths of getting those numbers, but that struck me as the most obvious way. They're all your liabilities, so just add those, and that's equal to 417,400. Assets, take away liabilities, 351,400, and that is your reserves 1st of January 16. Okay, so when we call it a statement of capital, when that's what's asked for, we just call that capital 1 January 16. It's a statement of reserves I'm asked for here. Same thing. Reserves 1 January 16, 351,400. So that's going to come in again in my balance sheet in the financed by. But next thing I need to do is the shop account, and I'll do that in the next video.